Today we're going to talk about private mortgage investing. Hi, my name is Joe Walsh. I'm a Toronto-based mortgage broker with over 35 years of experience in mortgage financing. There are a number of reasons why it is a growing form of investing. One of them is the rate of return. You get a rate of return that is established at the beginning, you know what you're going to be making, and it's fairly reasonable. It's a much better rate than you can get right now on a GIC, and also it has less risk than things like the stock market. In the stock market, yes, you might hit some home runs, but you might also be on the losing side as well. So people are liking that, they can invest into a mortgage, they put it against good real estate, they know what the return is going to be. And the other thing with investing in mortgages is you know when you're able to get your money back. The mortgage is for a certain term and it has an exit strategy built into it. So you lend somebody money for 12 months and then you get paid out. At that point, you even have the option to renew. If somebody's been a very good payer, you say, yes, I don't need my money right now. I'm okay to renew the mortgage. When we use the term private mortgage, it is a mortgage just like any other mortgage, just like a bank. We register a charge on title. Whether it's a first or a second, it's a mortgage. This just happens to be a private mortgage only because the lender happens to be just an individual person. An important thing with lending or doing a private mortgage is making sure that your capital is preserved. I would say that is the major priority when you're a private lender. To go out there and get high returns, and even if you do it for a while and it works out, there will come a time when it doesn't work out. If you start putting your money into risky ventures, so all of the money that you made up to that point, basically you give back because you put money into something that's risky and now you're giving it all back. That's where you can lose some money. So again, the priority is preservation of capital. When you're lending money, we usually find that private people like to lend near where they live. You want to feel comfortable with an investment. So if I have an opportunity maybe that is 200 miles from where you live, you're not going to feel as comfortable. What is a bungalow worth 200 miles away from you? But you know pretty well what a bungalow is worth around the corner from you. So that's the type of investment that private people usually like to make. Something that's close. Something they can drive over and take a look at. It doesn't mean that you wouldn't lend outside your area, but if we're going to do any lending outside the geographical area where you live, we probably would do it in a lower loan to value. We'd have to have some pretty good reasons why you would be investing in something that's 200 miles away. What types of return can somebody make on a private mortgage? Again, I'm going to go back to the risk level. So returns, whether it's a first or a second, would be anywhere between 7 and 12%. That's the rates usually that we get from most of our private lenders. Again, there is 15, 16, 17% out there. We feel comfortable more in the arena where the rate is much more reasonable, and therefore we stay in the lower loan to value. So if you're lending somebody 50 or 60% against the property, yes, you're likely to give them more of a 7% or a 7.5%. If you're lending somebody up to 80%, then we're looking more at the 10, 11% range. So return comes down to how much risk are you prepared to tolerate. If you need a mortgage right now, or you need to plan for something in the future, give me a call or send me an email. If you get my voicemail, leave your name, number, and best time for me to call. Your call is important to me and I will call you back. Look forward to speaking with you. Take care.